Anastasia, what is the bigger problem for the market now? Is it the Omicron variant? Is it the Fed? And would you be buying on some of these concerns?
Yeah, Sarah, I think all of those were problems for the market. And yes, I am encouraged by the market action today, and I would be buying on this dip. The reason why this is a more constructive backdrop that we have this week versus last week is because a lot of these concerns, Sarah, that you're mentioning have gotten to be reflected in the market over the last week. For example, we worried about the Fed taking a hawkish pivot, and they did that last week. And as a result, rate hikes or tapering expectations being faster than before, that's already reflected in the markets. I also worried about the price of oil that was in the month of October, early November, was moving higher at an unsustainable rate. So there needed to be some reckoning in the oil market. And once again, we got that last week and then some. I do think oil hit oversold levels. And then we worried about the Delta variant, which then ended up being the Omicron variant that swept the market. But as we starting to find out over the weekend is that even though cases are surging in South Africa, the severity of them for now doesn't seem to be surging. So I think we've kind of worked through a lot of those fears. We've priced them in. If you take a look at the price of oil, if you take a look at the price of airlines or some of the hospitality stocks, they started to reflect some of those worst case scenarios. And I don't think we're ultimately going to get that. And then finally, to Mike's point, there's a lot of squaring of positions, speculative positions, that also happened over the last week. Take a look at tech shares, take a look at crypto, and just hedge funds generally have sold equities and they've sold technologies. And I think that's what needed to happen for a much more constructive backdrop here.
Travel stocks taking off today. Seema Modi's got the details of that sector for us. Hi, Seema.
Wilf, Anthony Fauci comments over the weekend seen as encouraging. That's providing a nice lift for travel stocks. And then there's Expedia CEO Peter Kern just in the last hour at a conference saying he thinks over time consumers will become desensitized to headlines surrounding COVID on travel. Now, on the restrictions unveiled in last week arising from Omicron, Kern said adding obstacles to travel like additional testing does lead to lower demand. Now, competition is also on the horizon. One of the biggest names in travel, Vacasa, set to go public, a $4.5 billion SPAC tomorrow. It will compete with Expedia's Vrbo and Airbnb. Meantime, some big moves in the cruise lines. Among the most reactive sectors to Omicron news, sold off on Friday, rebounding today. Carnival, the best performer in the S&P, despite news of 17 COVID cases on a Norwegian ship that disembarked yesterday in Louisiana. Norwegian up 9%, Carnival up around 8%. Sarah and Wilf.
Seema, thanks so much for that one. Anastasia, good entry point for the broader travel sector?
I do like it, Wilf. I think, as I mentioned, airlines, leisure and hospitality, hotels, all of that came under very severe pressure. But if you look last week, but if you look at the basket today, it's probably up about 5%. We do have several catalysts that should still be intact into 2022. We should have the more full resumption of international travel, which is still down 50% from pre-COVID levels. And we should also have a resumption of business travel, which is down about the same. So I don't think Omicron is going to deter it. So I do like buying back into some of those stocks.